The following is a presentation of TFNN, live at TFNN, The Money Masters. Now, The Money Masters.
Good day, Money Masters and Treasure Hunters. Welcome to the October 3rd, terrific Thursday edition of the Money Masters Show. I'm your host, Steve Rhodes, and I am grateful for your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with the tools that empower human potential. Because living up to our potential, folks, that's something you and we must master each and every day. So let's begin with an empowering belief, and it goes like this. You've heard it before. We have no idea of the giant capacity we can immediately command when we focus all of our resources on mastering a single area of our lives. And one of those areas of our lives, well, that should be in mastering trading. Another area, most certainly, is time. You see, once we master time, we understand that we typically overestimate. We overestimate what we can accomplish in a year. However, we underestimate what we can achieve in a decade. One reason so few of us achieve what we truly want is that we never direct our focus. I know that's not true of you, but many never concentrate on our power of focus. Many just simply dabble their way through life, never deciding to master anything in particular. Success comes from taking the initiative and then following up, persisting, and always expressing the depth of your conviction. The question is always, what simple action could you take today, right here, right now, this very moment, to produce a new momentum toward the success that you want in your life? This much I know to be true. The path to success is to take massive, determined action. There's no abiding success without conviction and without commitment. If you want to be successful, find someone who's achieved the results you want, copy what it is that they do, and you will achieve those same results. The time is now, folks. It is now to master anything that you want in your life. Because mastery, well, that is a beautiful thing. I always leave you with this. If you knew that everything was going to turn out okay, how would you live your life today? Let's go check out and see how the markets want to live their life today right now as we speak. You've got the Dow is off 107 points, trading out at 15,025. S&P down 12 points at 1681. Composite off 22. That's trading at 37.93. Russell 2000 down 9.5 points. Leading the charge to the upside in the markets are PVH up $5, up 4%. CREE, Cree, that's up about 5.5%, up 375. Sarepta Therapeutics jumping in on the action. They're up 6% here this morning. VIP Shop Holdings, VIPS, up 4%. That's up 275. CalAmp Corp up 15%. Valiant Pharmaceuticals up 2%, up $2 and change. Kihu 360 Technologies up 2.25%. That's up about $2 and change. Agerian Pharmaceuticals, I probably butchered that, but that's up $2.36. Ralph Lauren, RL. I believe Ralph Lauren had a little hammer candle yesterday. That's up $1.79. As I recall looking at that last night, that's out towards some lows. Maybe we'll take a look at the Ralph Lauren Polo chart. To the downside, we've got some leaders here. You've got Priceline, that's off about 0.6%. Not a great big deal out here because it's traded $1,060. That's off about a little over 6%. Equinix, EQIX, off $6. That's down 3.5%. Texas Industries, TXI, off 7.5%. Tesla Motors down $4 and change. Biogen, BIIB, off 2% this morning, down $4. Angie's List off 15%. Ashland Inc. down 3% off $3. Herbalife off about $2.70. And Boeing. I believe Boeing had a hammer candle as well yesterday. We'll take a look at that if I can remember to do that. And if I don't, just remind me. It's on $2.59. Our call number is 877-927-6648. Give us a call, folks. Let's start off by taking a look at the ES Mini. We want to pay attention to this. This is the 30-minute chart. Had some nice hammer candles that appeared last night. One at 8, one at 8:30 out there. We're going to use the 8 o'clock one. That's the deepest one. That is the one that came in at a price low of $16.73.50. So far, the intra-session low, and we're going to start getting to an area here where we need to see a bounce or move sideways out here. So far, the inter-session low is 1673.75. So get down into that hammer. Hammer candle, it's a beautiful candle because it gives you the opportunity to buy at lows. I mean, that's really what the meaning is that is out there. I'm not saying go ahead and buy this. I'm not buying it because I look for other patterns to complete as opposed to candlesticks are just simply to be used as tools for the other indicator strategies that you might use out there. You do not trade on candlesticks alone, but we want to know where the bullish and bearish sentiment in a market is. You absolutely want to make sure that you know that, and that's been identified here. Well, it's been identified in the S&P 500 as well. We'll take a look at that momentarily. Let's go take a look at the VIX index here. Boy, that's up at 1745. It's above that 50-day exponential moving average. Pretty dangerous thing when Basil's VIXie, it's his girlfriend, I believe, one of them, when it is trading above the 50-period exponential moving line. I believe he also has Dolly. And what's his other one? VIXie, Dolly, and I know there's another one out there. Always makes me smile when he talks about those. Let's go take a look here at the New York Stock Exchange. Bondi. You got to come up with another name for Bondi. What is he? Because that doesn't sound like a feminine name. So we got VIXie, we got Dolly. We got to come up because I don't think Bondi. We got to help Basil with a nice feminine name, feminine energy name for Bondi out there. Maybe you guys can help us out, but I digress. Let's take a look here at the New York Stock Exchange. Not a lot of damage out here inside the New York Stock Exchange. Still traveling right around the 0.382 retracement level. It's got to make you say, something to think about out here because the wider swath, the wider breadth of the Blondie. I like that one. Now we're talking. Okay, there we go. We're going to come up with some names here in the den. Hey, folks, if you haven't had a chance to check out the Tiger's Den, you really ought to. One way to take yourself, you always hear that expression, take yourself to the next level. What the heck's that actually mean? Well, I can tell you what it means. It means that if you want to lift yourself above where it is that you are, the only way you're going to really be able to do that, the easiest way, it's not the only way, the easiest way is to change your peer group. And that's really what you can do when you go into the Tiger's Den, let alone you can watch all of our charts in HD out there, and that becomes a very nice thing. If we take a look at the New York Stock Exchange, it's trading at 96.34, and even though this has given us some bearish signals out here, it's not convincing when you take a look at price action. It's not even close to convincing when you take a look at price action. So that's on the New York Stock Exchange, still hovering around the 0.382 level out here. And when this market does turn, it's going to be a huge, big bounce. There's going to be a lot of energy here because other than the Dow, other than the dog out there, not a lot of breaking down. Well, the S&P is the second weakest out here, but even the S&P 500, if we take a look at it, it still is. It formed a little hammer yesterday, the low of which is 1680.34. We haven't been down there. Again, a hammer candle. It really is where you would, now, you're not getting a confirmation here just yet, but it really gives you the opportunity to try to buy a low out here. Would love to have seen that hammer candle actually move down to the bottom of that rising price channel. That's the blue diagonal lines that you see on our screen out there, but you get what you get. So the important low inside the S&P 500, you've heard me say if you're long, you're wrong when you close below it. Well, the problem is that what that really means is that you'll move down to the next support level. And I suspect the next support level inside of the S&P 500 is the top of the gap from September the 9th. 1672.40 would be that number, which will take you into the top of that gap. Will take you in maybe 1686. So it's somewhere around 1686 to 1666 to 1672 out there. That's if, in fact, the hammer candle gets broken. If we take a look here at the Dow, well, this thing just looks ugly, and this is coming back into the 0.786 retracement level. It's going to be, looks like it wants to move down to about 14,963, maybe a bit lower out here. Has not achieved a oversold status just yet, so it's got room to make its run all the way to the 14,760 type level. Right now, trading out at 15,028. When this market does turn, I don't think that it is the Dow. Of course, it's a rubber band that's getting stretched. So last time, most certainly the weakest index certainly was able to make a huge run and catch up to the rest of the indices out there. So, can it do it a second time in a row? I don't know, but if we stick around, we'll find out. Not today. Now, how about the Russell 2000? What's Russell 2000 doing right now? It's trading off 1073.81. Key for the Russell here today, no bearish candles or anything. It does have that nice wide-ranging bar grab the wrong tool out there. We'll draw a line across the bottom of it. From 2 sessions ago, that was on October the 1st out there. So the low of which is a price level of 1073.47. If it closes back above that, again, the real area of bearishness inside the Russell 2000 would be getting back into the lower part of the range, the little area of resistance that now should be support, which is the high of August 5th at 1063.52 out there. So certainly not a bear when you consider what the Dow is doing versus what we just took a look at inside the New York Stock Exchange, even the S&P 500. Now the Russell 2000, it's not exactly as if we're getting tons of confirmation out here in a market that wants to turn. And then, of course, all you have to do is just switch over and take a look at the NASDAQ composite. Not even close to being weak out here. So no weak link here. It's just a market. It's just a bunch of media buffoons. I probably shouldn't call them that, should I? It's just a bunch of media personalities just trying to sell fear out there. Just look at the charts, folks. They will guide you. They will absolutely guide you. So inside the composite, no cracks there, no chinks in that armor, not as we speak right now. If we take a look at the NDX 100, the same story out here, no chinks in the armor. The NDX 100, it's going to move up to 3378 eventually, and then 3466 is probably where it wants to go ahead and take a rest. All it's doing in the most bullish fashion that you possibly can do is just simply moving sideways. When you get a market, when you get something that just simply gets into an overbought status and moves sideways, folks, that is as bullish as you can get. Likewise, you get something that is oversold and it just also moves sideways. It's telling you, guess what? More room to run to the downside. But in this case here, you got the NDX, you got the NASDAQ composite, you've got the New York Stock Exchange. That's a biggie out there. You got the S&P 500, the Russell 2000, the Russell 3000, the Russell 1000. Let's go check out the SOX index. Let's go see what the semiconductor index is doing out here. We haven't looked at that for a while, so let's go see what that has in store for us. And it's pretty amazing with the VIX index being above 50 the way that it is, that the general market, with the exception of 30 stocks, has held up so well. Oh, geez, the SOX index. My goodness, folks. This is not bearish. In fact, if anything, the SOX index is, let me just make sure my chart is updated here, which it is. So the SOX index has been trading in a consolidation range, the low of which is from the May 3rd time frame, which is 450.17, the high of which came here in that doji, which is a significant area of resistance here. That was on July 17th. The high is 493.20. You're trading at 493.61 out here. It broke out above that area on the trading session of September 19th. It's come back. It's tested back above. Did come below it here. A little bit of fear that came in on last Friday, September 30th, but it immediately got back above it on Monday. Now you're just trading at it right now. Folks, this isn't bearish. This is the semiconductor index out here. This is actually trying to break out of a trading range that goes from, what did I say, about 493 to 450. So a 40-point move says that the semiconductor index wants to go visit the, what is that, about $535-ish level when the market gets ready to break. It's a beautiful thing. Dow's off 102, though. 877-9276.
Andy Hecht, the host of the Commodities Hour, recently launched his newsletter service, the Technomental Commodity Report, and only 6 weeks in, Andy has already recorded a triple-digit winner. Andy advised his subscribers to purchase a long-term call option at 46 cents on July 11th, and then sent out a special update Friday, August 16th, advising his subscribers to close that position at $1.40. That's a 204% profit in just 5 weeks. The Technomental Commodity Report by Andy Hecht is released each Thursday morning, and right now you can get a month-long free trial to this subscription while locking in the low introductory rate of only $39 a month. Andy Hecht has been a commodities trader for over 3 decades. Let his experience work for you. Sign up for your month-long free trial to the Technomental Commodity Report today at TFNN.com.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC. Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different futures contracts? Now you can with TAS Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now you can receive a 2-week free trial to TAS Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com. McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces. And over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a 3-fold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. A little more blood in the streets out here. The Dow's off 127 right now. S&P is down 15. Let's go check in on the currency markets out here now. I've got the Great British Pound U.S. dollar. I just happened to click over to the monthly time frame on the weekly time frame on my chart out here. Now, if you are watching us on Tiger TV, thanks so much for doing that. Obviously, in the den, you folks are able to see the chart out here. And if you're just listening on the radio or your mobile device, thanks for doing that. Go check out the archive. Just move it forward to this time of the show, which is 10:24, so 24 minutes past the hour on this weekly chart. If you want to see a chart, I forgot that I even had this up here. If you want to see a chart where you can take a look at pattern recognition, or you take a look at Fibonacci numbers of swing points coming together, this one is here's a textbook one. Here's a thing of beauty. Now, taking a look at this is a weekly chart, and if you go back to the lows inside the Great British Pound, that would take us back to the time frame here of January in 2009. The low out there was 135, $1.35 out there. That's versus a high that was in here back in the peak back in August of 2009 out at a $1.70 out there. And that's not all-time highs or anything like that, but there's your all-time high all the way back here in 2007 out at $2 and change in the marketplace. But let's just pull this back here. And what you can see is as price came down, it created a nice little butterfly, 1.618 butterfly buy pattern. That was nicely confirmed on the trading session here of March 15th, 2000, the week of March 15th, 2003. Now, that happened to be a 0.618 retracement level. It happened to be a 0.786 retracement level of another Gartley, a 0.786 Gartley buy pattern that had formed with a nice hammer candle on May 21st out there. So that was a beautiful thing. So 0.786 retracement of that. A 1.272 expansion off of a swing point from September 10, 2010 that actually set up a sideways consolidation range out there. I mean, look at all those Fibonacci numbers coming together. Now, that butterfly pattern looks like it made a small A to B equals CD up. If we go take a look at that off of here's your A point, your B point is May 3rd, 2013, pulls back and makes a 1-to-1 A to B equals CD, and then goes ahead and pulls back and tests that that area of support out here. That the butterfly buy pattern that had formed. The nice bullish engulfing candle that was out there. And now we can see here is on a weekly chart, not showing any kind of bearishness inside the Great British Pound, U.S. dollar, at least not yet. Now, on the daily chart, we identified the areas of resistance out there. We had given a price projection, which I'm sure that price projection takes us right up here. This is 163, takes us right up here to the top of the consolidation range that I've been traveling within. It looks to me a little more, though, that it's going to get past this area. The 1-to-1 A to B equals CD. If we take a look at it, look at that. How about that? The 1-to-1 A to B equals CD takes you right up into the top of the consolidation range out there. And above that, the 165 level, which I suspect is where the Great British Pound wants to go to. Now, on the daily chart, all that it's doing at the moment is just working off a overbought condition. We can see that here, just utilizing the relative strength indicator out there. And as soon as it gets above the 1.6259, it'll be a little rocket ship because it will be over a resistance level, and that will then become support. Of course, this wide-ranging bar right here, that's a big clue that it wants higher price because that was breaking that 0.786 Gartley sell pattern. So that's on the Great British Pound, U.S. dollar. If I go switch down into an intraday chart, into a 30-minute chart, maybe that's going to tell us a little different picture at the moment. That happens to be the Euro-Japanese yen. That's not good for prices here today. Of course, let me just see what kind of retracement it is that we're doing here because it's broken back down into the subcorrection price channel that it's in. But if we take a look at, see what kind of retracement. So it's doing a 0.786 retracement right now. So this area here where we're at inside the markets, inside the Euro-Japanese yen, the 132-ish level, if that holds, then that's good, and we'll see it bounce out of there, and then our markets ought to start moving a bit higher out here. But if this level fails, the Euro-Japanese yen, I'll go back to the Great British Pound momentarily, but since I pulled open this chart and I'm controlling the charts, I guess, we'll just stay here for a moment. So if this area fails, we'll see the Euro-Japanese yen head down to about 132.09. Maybe even 131.79, and that'll put some more pressure inside the marketplace. So we'll see. It's an important point right now where the Euro-Japanese yen is traded. But let's go back and take a look at the intraday chart on the Great British Pound, U.S. dollar. Let's go see what it is doing. It's up against an area of some decent support out here. A 0.382 retracement off of the significant swing point from 11:30 in the morning on September the 26th out here. We're looking at a 0.786 retracement off of a cluster of swing points back in the time frame of about 7:30 in the morning on September the 30th. Looks like a 100% move of a move coming back to the October 1st area. Anyways, right now the Dow's off 116. We'll be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at Nadex.com. That's Nadex.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow's off 125 right now. S&P off 15. Had a request to go take a look at bonds. Let's take a look at the intraday chart here for bonds. Just kind of get a feel for the message of the market here, the breathing pattern of the 30-year Treasury. Now, it's right now trading out at 133.20 out here, coming in with some nice wide-ranging bars. If we take a look at, hopefully you're watching us on Tiger TV, as bonds are making a low this morning at about 10 minutes to 6. We can see that, again, just using this indicator, this a couple set of indicators out here, you can see on that relative strength indicator, the momentum indicator is all that it's measuring. Look, folks, there's four aspects of there's four aspects that I think you need to always be paying attention to inside of a market. And one of those is most certainly is the momentum that is out there, and that's really what and there are a number of momentum indicators. Just become a master with one. Go find one that is going to work best for you, and that'll be just simply so helpful. You know, you can use the stochastics as another momentum indicator. Whichever one you use, don't spend time learning both of them. Just use one, because they correlate 85% of the correlation between the two is 85%. So there's no reason for you to master both of those. You're just going to be spending a lot of time doing the same thing. You want to make sure that you also are able to understand the I don't know the right word for it, the verticality, the angle. I don't even know if verticality is a word out there. It might be one that Stevie just created, but you know, there's an angle. David White, he's got a beautiful system, the Power Law Vector Indicator. That's one of the best that I've seen to help you understand the energy behind a move. The MACD measures the power as well out there. Certainly volume. We want to understand supply and demand. It's important. Again, 4 different elements. Then you need to understand liquidity, volatility, open interest in commodities, things of that sort. You want to also, to understand verticality, you can use candlesticks. Candlesticks are probably one of the most reliable indicators for understanding the power and the angle. In fact, it's a fantastic tool. And if we use that fantastic tool just to take a look at, as the 30-year Treasury was coming from the extreme, it had to bounce. Just take a look at the RSI 3-period indicator out here, down to the level about 219. Didn't have much further to go. Look, folks, when it gets down there, just look at the rubber. This is nothing more than a market that it acts like a rubber band. You're just looking for patterns that exist in the marketplace. And you're looking for indicators, momentum indicators, whatever they are, to help you to be able to trade out there. If you think that a market can be stretched and it can just absolutely have to stay down there, then just put up one of these indicators on the screen. You'll see it's impossible. It doesn't work. It violates the laws of the market. Forget about laws of theory of relativity and everything else. It just simply, these tools measure when the rubber band's going to snap. Pretty cool tool out here. Tool or set of tools, I consider. Now, take a look at it. Again, coming into the 5:50 a.m. time frame here this morning. A little doji candle. Doesn't mean a whole lot down at a low, but what we could see is the market was certainly sold down there. We saw a move higher. Now what we've seen coming into the 0.382 retracement level, all I'm doing on the intraday chart, the 30-minute time frame, is going from the high that came in at 11:20 yesterday morning, going from that high down to, and by the way, when that high was being made, if you use both these indicators out here, it was also inside what? Inside an overbought condition. So there's that rubber band now stretching up to the top. It stretches up the top. It's got to work itself off. It moves all the way down to a retracement level, 0.618. People get off the elevator, move sideways. A market that moves sideways and consolidates sideways, well, it is, at 65% of the time. So there's been work. It's not work that I perform, but it's work that others that I trust. There's been some other studies that have been done, and 65% of the time, I like those odds, 65% of the time, a consolidation move resolves itself in the direction that it came from. Well, in this case here, that's exactly what happened out here. Resolved itself to the downside, gets into a oversold condition, has to work off that rubber band. Now we're seeing that bounce. You can see here it's going to start moving into an overbought condition here in the near future. But you got that wide-ranging bar slicing through the 0.618 level. The bar looks pretty good right now coming into the 0.786 area, 133.21. And if we take a look at it, so that says that, maybe bonds intraday here get up to 133.29, make that 100% move of a move, somewhere between where we're at right now and in that 133.29 area, before it has to either move sideways or begin to pull back. But it's nothing more than the rubber band that is stretching, these markets going up and down here. A question to take a look at EEM. So let's go take a look at EEM. I believe that is, let me go find out. I forget. That's Emerging Markets ETF, I believe, out there. So we can absolutely take a look at that. Let's do I just put it underneath this tab out there. So I hope that helps you, Angie, inside the den. If not, let me know, and I can go look at something else on bonds for you. But that's what's going on inside of the 30-year Treasury. EEM is the ticker symbol here for the emerging markets out there. Made a nice little Thomas DeMark 13 count, as I see out here. Boy, it's made a couple of 13 counts that you have to pay attention to. It made one out here back in May 8th of 2013. That set up a pretty significant high. Thomas DeMark has a very cool system out there, but it's a complicated system. It's a relatively complicated system out there, but nonetheless, it is one to pay attention to. And this is also the way that this system, it was built for, who did he first build it for? Well, I'm not going to bore you with that. I don't know why the name. Got a little brain fart and contusion going on. You know the name. In any event, forget about that. It'll come back to me. And so the guy that he built it for, guy that you know for sure, when he took a look at the system, his comment was, "Man, when this thing fails, it really fails." Now, that's a beautiful thing about any trading system. That's a beautiful thing about Gartley patterns or retracement patterns, is that when one area fails, and the question is always, how do you know if an area is going to fail? Well, if you understood the power of the candlesticks out there, they are a great indication. It's one of those indicators, one of those angular verticality. It helps you so much just simply to understand that. Now, if we take a look here at the EEM, it made another one of these 13 counts right up here as it made a high back in September. So perhaps this thing is making on a daily chart. Let me make sure I got all the data out here. The question was, let me go back to the question. Looks like a Gartley sell with a counter trend. So if we take a look at it, it's certainly now wide-ranging bar out here. Very unusual for the market to actually go ahead and finish on a wide-ranging bar like this. This is the trading session. This is Uncle Ben Bernanke Day, September 18th. So just out of just knowing that and taking a look at what the markets have done here. Now, the EEM, because I don't know what's behind it, we're going to ignore the gaps out here. Because it's traded off of a number of different vehicles, so this is not really the underlying instrument, because otherwise you might suspect that this is an island bottom reversal down here on September 30th. So we'll ignore that altogether. But markets don't typically end on candle sessions like that, not with that type of power. But did it set up a actual Gartley sell pattern? It did, but in my book, it really never confirmed itself with that wide-ranging bar and just seeing price travel here. So in essence, if we take a look at what a Gartley pattern should first do, it should first make a dead cat bounce or a 0.382 retracement. And if we take a look at the legs out here, we're going to see that that's exactly what it did. If we grab the correct swing point, that is. So if we go back to the June 24th low, all the way up to that wide-ranging bar, Uncle Ben Bernanke Day, the 0.618 or the 0.382 retracement is $40.58. Now check out that candle session here on the trading session of September 30th. It got down to a low of 40.49. 40.49 versus 40.58. So that is the first move on the way down that it should do. And now the question is it just making a counter trend move in order to make an A to B equals CD down? Now, volume-wise, the answer to that is absolutely yes. Because if we take a look at the volume over the past couple trading sessions, it made a low out here on the trading session of September 30th with volume of 93 million shares. The next trading session on the way up, 62 million. 46 million yesterday. And so far today, 13 million. But you've been trading for an hour. And if we multiply that out, that comes to about another 50, 60 million, something like that out there. But you got to be concerned about this candle right here. As far as its retracement so far, again, normal retracement. If we go from the high down to the low that came in here on September 30th, I'm talking the recent highs, it's already through the 0.382 level. So it looks like to me 42.72 if you're trying to play the EEM to the short side. It looks to me like maybe the 42.72 area would be the place to start looking at. But I would say be careful. This looks like the actual market itself. In fact, if you take a look at the emerging market, what we can say is with the Dow just being just a nasty dog out there, trading out right now just above the 15,000 level out here, that a number of these charts that we look at aren't extremely bearish out there. It's got to make you say, something to think about. So that's why I said it. Now let's go back into the let's go take a look at some stocks that are moving and grooving. Actually, let's go take a look at core stocks out here. We need to look at core stocks. IBM being one of them. Let me get rid of all these moving averages out here. They're just cluttering up my screen. So let me get rid of this one. And good Lord, I got plenty of them out here. Let's see if I don't even know how those got on the screen out there. Must hit some wrong keys. So there's IBM. There's that nice 30-point consolidation that's been traveling in since January of 2012. And it's pulling right back into that area. Volume yesterday was 3.6 million shares. Been trading for an hour today. Volume is 822,000. So if we do the straight line math on it, it's probably right around 3.5 million shares, 4 million shares coming into the swing point that had about 4 million shares on August 28th. It's not exactly like IBM is breaking to the hills to the south out here. So actually, IBM's actually IBM's setting up a pretty nice buy, in my opinion. A nice buy from the standpoint that you don't have to risk a lot, meaning the line in the sand is pretty well drawn out here. I mean, it's the lows somewhere right around the 181-ish level, 181.85, somewhere right around there. You're at 183.68. So, let the Dow keep doing some of its work out here. the market's going to bounce. IBM's number one weighting structure inside here. But it really, if it can't bust them, what's the saying that our leader, our fearless leader has? If it can't bust them down, it'll try to bust them up. Right now, IBM is not exactly trying to bust them down. Let's go see, actually, if it is a fearless leader inside the Dow. Let me see. So Dow's off 129 points. Who's leading the charge on the way down right now? Dollar-wise, looks like it is Boeing. BA is the ticker symbol. So let's actually just go take a look at Boeing, see what the heck it is doing out here compared to yesterday. And yesterday it did form a small little hammer. So all Boeing is doing is coming into an area where it broke out. Let's see what kind of volume it's got on it. It's been working off that overbought. Look how overbought this thing got as it made a high out here, Boeing, on September 19th out there. It's got to work that condition off. It's just backing off into a gap from September 16th. 7.7 million shares there. So far today, 1.2 million shares. So it's got some pretty decent volume in here, but it's coming into some pretty decent volume. It hasn't even made its way back to the gap. So here's a equity will go from its most recent swing point low, August 28th, to the high of September 19th. It's not even made it to the 0.382 retracement level. Something to think about. How about Chevron? Let's go check out Chevron. Now, let's look at ExxonMobil here, and then we'll go take a look at Chevron. So let's go see what these two stocks are doing, because ExxonMobil moving back into its consolidation level. Let's go check out the volume that it's doing, and it's in oversold territory. So it's in oversold territory, can move a bit lower. Yesterday did 11 million shares. So far today, about 2.7. So it's got some pretty good volume. It's coming into a swing point that held that consolidation level that has 17 million shares. I don't think so. Doesn't look to me like it's got the volume to bust through that area the way that it is even trading today. So inside ExxonMobil, a test of 85.02, close above it, unless it's 17 million shares. Again, your back is up against the wall. Look, if that area gives way, it's pretty simple. It's a $7. I don't even know why I had that up there. It's a $7 trading range to the downside inside of ExxonMobil. So a couple key stocks for us to really be paying attention to. I did mention Chevron because that is the second leader dollar-wise to the downside. CVX is the ticker symbol. Let's go see what it is doing out here, see what it is trading against. Now, this looks weaker than IBM, but it also has a consolidation pattern. Let's get rid of some of the other tools that are out here on the screen. We'll leave the 200-period exponential moving average out here. So you've got a 10-point consolidation inside of Chevron, backing off today so far with 2 million shares. The swing point that it's going against basically has got 7 million shares out there. So 7 million. What did it do yesterday? About 6 million. So this thing could back off a bit. The bottom of the consolidation range, right around the 117 level. Boy, wouldn't it be nice to see the Chevron Mobile back off to its consolidation level, ExxonMobil to hold its consolidation level, and then bounce from there. That would say I would start looking at the DIG. Just like if these areas break, you would go ahead and flip and take a look at the other side, the DUG out there, are a 300%er. So you got the two largest weightings within inside, I believe it's the two largest weightings within inside the energy sector that are coming into consolidation areas. United Technologies looks like UTX looks like they are also struggling here this morning. Dollar-wise, that's trading off about $1.43. UTX, let's go take a look at that. We'll take a look at it when we get back from this break, because we got one more session for you. 877-927-6648. We'll be right back.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try patterns, profits, and peace of mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's patterns, profits, and peace of mind.
And get the edge you've been looking for.
Have you subscribed to the Gold Report yet? On Wednesday, August 14th and Thursday, August 15th, Tom O'Brien advised his Gold Report subscribers to close out 6 of their 9 open positions, all winning trades ranging from a 10.69% profit to an incredible 48% profit in just one equity. With the 600th weekly Gold Report issue fast approaching, Tom O'Brien brings an incredible wealth of knowledge and experience to the gold market and the equities within the industry. That's almost 12 years since this powerful newsletter first began. And right now, you can get a 30-day free trial to the Gold Report by visiting TFNN.com. Make sure you're a subscriber as this volatile gold market makes its way back into positive territory after declining all the way from $1,900 to under $1,200 an ounce in only 2 years. Get your 30-day free trial today by visiting TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Dow's off 122 right now. And before we went to break, I mentioned the United Technologies, UTX, and I thought we'd just go take a look at the chart. Now, you know, it's always important to understand what type of time frame you are making your trading decisions on, because each time frame is going to have a little bit different look. Now, of course, the larger time frame is the overall trend. So as we take a look at United Technologies, last month it made its all-time high, getting up to a price level of 112.46. And if we look for, bearish candle signals, the last time that the bears tried to show up inside this equity was right here, the trading session of April the 30th out there. It formed a little dark cloud cover. Remember, that dark cloud cover is nothing more than somebody forecasting that it might rain out there, and that forecast got blown away by some winds that came in from the south. And those were the bulls that pushed price up, and they got rid of that during the month of May. So this month here right now, of course, we're only 3 days into the trading session, so it certainly doesn't make a month. But right now, that would also be considered a dark cloud cover. But otherwise, this stock chart here on the monthly basis looks pretty darn good. On the weekly chart, let's go see what kind of troubles might be brewing here, what the candlesticks are telling us here. And, it told us that the market was tired. Let me get rid of the retracement levels. Gave us that indication, that little doji up here at a resistance area. Told us that the market was tired. That's from a weekly chart. He had a bearish engulfing candle, but come on, that little body right there last week, that's such a small body. So the market is tired up here. Let's just go see how overbought or oversold it was. You can see, what I don't like is that it actually made a higher high on less relative strength. So that's not a very good sign, especially on a weekly chart out here. Right now, it's coming back into this swing point on the weekly chart. 11.9 million shares the week of August the 30th. If it breaks that and it breaks a swing point to the downside, which it hasn't done since, I haven't seen that in a long time inside UTX, then that would be trouble. That would be double trouble out here. So the swing point that it would need to break is the 99.50, and then you can start taking a look at overly bearishness on the weekly chart for United Technologies. On the daily chart, what's going on inside the daily chart is prices coming back to the last breakout. Had volume here on that breakout. The trading session was September the 3rd out there, and the low of that area. So the range, it's trading right down to the upper part of that, 103.13. Let's see if it hit it. That's got 4.6 million shares. And yesterday it was down with 5.6, so it's coming in there with too much volume. Today it's done 1 million shares, so that mass out to some pretty decent volume as well. It has tested 103.24. The top is 103.13, so it hasn't been down to that candle on September 13th. But looks more like, to me, United Technologies probably wants to at least come back and test that swing point area from August 29th, or at least fill the gap from August the 30th. So looks like United Technologies, if we take a look at retracements as well, from the low to the high out here, it's below the 0.618, their retracement level. So looks like a move is in order here for United Technologies. If it breaks 99.50, that would spell some trouble out there. So we take a look here. Let me go back to the 30-minute chart. We did see the ES Mini break that hammer candle. No, it hasn't broken the hammer candle. I take that back. I take it back. So if we take a look at the hammer candle, that's the one that showed up right here at 8 o'clock last night, low of 1673.50. And so what we can see here is that the bulls are trying to defend this territory. They defended it last night at 8 o'clock. Guess they must have gone to bed. They have now woken up. They had their breakfast, maybe a little bacon and eggs, maybe a little nice green juice drink out there, and they're going to try to hold this market. We'll see if they can. If they can't, we'll see price move down into at least the lows here from 10 o'clock in the morning on September 30th, right around the 1666 level. Stay tuned, folks. Our man Basil Chapman is up next. Following Basil, it's a terrific Thursday. That gives us Larry Pesavento, Daryl Martin, David White, Andy Hecht. I believe, is he on Thursday? No, maybe Andy Hecht, and then the Tom O'Brien Show from 4 to 6. So have a great Thursday, folks. Look forward to seeing you in the morning.
Are you ready to ride the next bull market wave? Catch the Chapman Wave. Using the Chapman Wave methodology, Basil's very comprehensive daily newsletter, The Opening Call, gives the short, intermediate, and long-term analysis for the key indexes. In his Trader's Corner, he gives a brief market summary and expectation for the day with possible trades, both long and short, which are reviewed daily. A position, subscribers sold recently for plus 42% on parts and plus 64% on rest. And Hertz Global as a core position for 6 months. A current position, entered as a turnaround company, is trading over 100% of its entry point as a portion sold earlier for a plus 21% gain. Subscribers to The Opening Call see the Chapman Wave techniques demonstrated and explained daily to also educate investors. Now you can get a free 2-week trial. Basil Chapman's newsletter, The Opening Call. Just visit the front page of TFNN.com.